Hi, everybody. I'm Becky Cruz from Bivio. Welcome to the kickoff presentation of Bivio's tax season. This presentation is designed to give you an overview of the tax preparation process, so you will know what is coming and what you can do to get ready for the end of the calendar year. I'm here tonight with my colleague Joanne Hermiston, and we're really happy to have Ira Smilovitz join us too. We're all part of the Bivio support team. You'll hear Ira later when we have some time to answer your questions. You can type your questions in now or ask them after the presentation as time permits. With that, let's get started. We're going to discuss 5 types of information. First, we're going to go through a brief overview of investment club taxes, what's required, and a little bit about the preparation process. We'll show you the forms you need to file, the steps you'll be going through to prepare your taxes, and important dates you need to know. Then we're going to discuss what you can do right now to get started and get most of the work out of the way so that your tax preparation will go very quickly once you receive tax documents from your broker and the tax program from us. We're going to reiterate some of the things you can do in your club to keep your club accounting simple and avoid any tax time issues. We're going to talk about changes that will be new for your taxes for 2022. And finally, we're going to touch on a list of things you may need to address prior to the end of the current calendar year. This presentation is only designed to give you an overview. Early next year, we'll be having more in-depth webinars, which will get into the details of actually getting your tax forms filled out. We'll be touching on a lot of topics tonight, so don't worry that you have to get it all down today. After this webinar concludes, you can find the webinar handouts on our Bivio help page. And if it turns out okay, we'll also post a recording in a few days. Let's start with an overview of the process. What are your tax filing requirements? One of the first questions investment clubs have, especially new clubs, is whether they have to file. And the answer to this question is yes. If you have an EIN number, you need to file club taxes. It doesn't matter how long your club has been in existence or how much income you've had. Your EIN number is your IRS business identification number. It's similar to a personal Social Security number. You'll have needed it when you opened your club brokerage account. You get the EIN number from the IRS. Their computers will be looking for a return to be filed that matches that number. If they don't find one, the computer will generate an automatic note to you telling you that you owe the IRS a hefty late penalty. Just so you know, the late filing penalty for a partnership return is $210 for each month or part of a month up to 12 months that the return is late or incomplete, multiplied by the total number of persons who are partners in the partnership during any part of the partnership's tax year. In addition, if you distribute K-1 forms to your members late or fail to include all required correct information on them by the due date, there's an additional penalty of $280 per K-1 that's a problem. This isn't a joke. We've had clubs contact us because they've received notices that they owed amounts in the tens of thousands of dollars for not filing a return. The fact that they had only a minimal amount of income was not important. It's easy to prepare your taxes using Bivio. Make sure you do it. So what forms do you need to file? Your investment club is a type of business called a partnership. Each year, your club needs to file what is called an informational tax return. For a partnership, this is IRS Form 1065. It reports the total income and expenses your club had for the year. It also reports each member's share of the income and expenses. The 1065 is called an informational return because your club does not pay taxes directly. Each member pays taxes on their portion of the club income on their own personal tax forms. As part of your Bivio subscription, you receive a program you can use to prepare your club tax forms from the information you've entered and confirmed is correct in Bivio. As you can see, this example is just a draft tax form. The IRS hasn't released final versions of the form yet. Each member knows what to report because your 1065 includes a form called a K-1 for each partner. You send in copies of all the K-1s when you file your club taxes, and you also give each member their personal copy. Each member will transfer the information from the K-1 to their personal tax forms to pay taxes on. Your club members will not be able to complete their personal taxes until you've provided them with their information from the club. If you'd like to get an idea of what would be reported on each member's K-1, there is a report in bivio called the Member Tax Allocation Report. It looks like this. A member of a stock investment club will have these types of income to report. First, you may have dividend and interest income. Your club amounts will be added to any other dividend and interest income you report on your personal Schedule B. You may have both short and long-term capital gains and losses, which will be combined with other capital gains and losses on your personal Schedule D. And you may have expenses, which will be shown for your information only. Since 2018, these are no longer deductible at any level on your personal taxes. You may want to show a preliminary copy of this report to your club members at the end of the year. If they have to pay estimated taxes, and if your club has had significant income, they may want to include club income in their income estimate. Just make sure that they understand that all information on the report is preliminary and subject to change as you do your final records verification. Now you know what you need to file, so let's discuss briefly the process you'll be using to prepare your tax forms. There are really only a few steps to doing your taxes. First, since your bivio records will be used as the source of information to fill in your tax forms, you need to make sure that what is in bivio is correct. This is the most important step and potentially the one that will take the most time, depending on the state of your bivio records. But it is also one you can begin right now. Once you verify your records, things will go much more quickly. You'll answer a few simple questions, and bivio will finish filling in your club tax forms. You can then review and file them with the IRS and distribute information to your members. We will be going through a more extended description of how you complete each step during the tax prep webinars we will hold during tax season. The intent of today's presentation is just to give you an idea of how things are going to work. You do need to be aware of the different timing deadlines that you're going to be working with as you move through tax season. The due date for filing your Club 2022 tax forms is Wednesday, March 15th, 2023. If you can't get them in by that date, you'll need to file for an extension or be subject to late filing penalties. Your members need the information you'll give them on the K-1s to file their own personal taxes. This way, they'll have their club information at least a month before those are due. To get ready to do your club taxes, you need to do a records audit in January to confirm your bivio records are in good shape. Your taxes are prepared from the information you've entered in bivio. You need to confirm it's all correct or your taxes will not be correct. This may be the most time-consuming step of getting your taxes done. By scheduling to address it in January, you'll have lots of time to handle any issues you need to get corrected. Your taxes will also need to agree with the 1099 forms, which are sent by your broker to the IRS to report your income. Brokers are only supposed to have until February 15, 2023 to get these to you. But make sure you check with them because some receive extensions to send them later than this. You can't finalize your club's taxes until you have the 1099s. Bivio makes the tax program available in mid-February for you to use to prepare your taxes. There's nothing extra to purchase. The ability to prepare club federal taxes is part of your bivio subscription. Your members can't complete their own personal taxes until you've given them their K-1s. Because you can't finalize anything until you have the 1099s, a reasonable date to tell them that they'll have their forms is March 1. This will also mean you'll have them ready to file before the March 15th deadline. We suggest that before the end of the year, that you let club members know the date they can expect their K-1s. This lets them schedule any appointments they need with their personal tax preparers. If a member needs club tax information before you can get the K-1s done, they should be able to make an estimate of what will be coming using the bivio Member Tax Allocations Report. However, don't give them that unless you've done an audit and have a reasonable expectation that your club records are accurate. Make sure they understand the information on it is subject to change. Now that you've got an idea of what you're getting into, let's talk about what you can start on right away so you can breeze through the tax preparation process when the tax program becomes available. As I said earlier, the first step in the process is the most involved, but it's one you can start anytime, and you should be keeping on top of each month when you have your club meetings. It's keeping your bivio records correct. Verifying your records is critical. It's not something bivio does automatically for you. If your records are not correct, your taxes will not be correct. There are 3 things your club should make a part of your regular operations to make sure the information which will be reported on your taxes is accurate. Each one checks different information. First, your club treasurer should be reconciling your bivio records with your financial institution statements monthly. If there are any disagreements, this means there's only a single month's worth of transactions to go through to find the mistake and make the correction in bivio. Some clubs assume account sync is their club treasurer. While it's a good assistant, it's not perfect. It's still up to you to ensure all information has been added correctly. Sometimes brokers make mistakes in the data file it reads. Other times there's information missing from the account sync data that you need to make manual adjustments for. Usually, a quick check each month will bring issues to light, and they can be quickly addressed to keep your records correct. Your club treasurer should be able to demonstrate that bivio agrees with your brokerage statement each month. Second, club members, other than your treasurer, should perform a records audit each year. This will reconfirm that all the information that will be used for preparing your tax returns is correct and that your club accounting is correct. The audit confirms additional information that the regular reconciliations may not pick up. And third, when you receive the 1099 forms which report your income to the government, you'll need to do a final check to make sure they agree with the information recorded in bivio. There are sometimes a few last-minute things, such as distributions from mutual funds, ETFs, and REITs, which may need to be adjusted based on the 1099 information. These are not known until you get the 1099 form, and they may require additional accounting adjustments because what shows on your club's tax forms needs to agree with what is reported to the IRS on your 1099 forms. There are comparison pages provided in bivio as you do your taxes that allow you to check this and make the necessary adjustments. The adjustments are not made for you automatically by account sync. I can't stress this enough. It's crucial that your bivio accounting records are accurate before you prepare your tax forms. If they aren't, your taxes will not be correct. If you're not a club treasurer, please don't close your ears and say, I'm glad I don't have to worry about that. Making sure your club taxes are correct is everyone's responsibility. If there's a problem with your taxes, all current and even future members may be on the hook to get it resolved. Though all members may not actually keep the club's records or prepare the club's taxes, they should all be asking the right questions so they know how taxes have been done correctly. Here's a very important point. IRS issues should not be something your club has to worry about. If you follow our guidelines for keeping your accounting simple and stay on top of keeping your records reconciled each month, you'll be able to sail through tax season quickly and easily. Now that you're ready to pitch in, let's talk briefly about the second type of verification I mentioned, and that's doing an audit. A good time to do one is in January, while you're waiting for your 1099s. It's often a less busy month, and your end-of-year brokerage statements will be available. If you need to motivate your club members, there's nothing wrong with making it a party. At Bivio, we're declaring the weekend of January 7 and 8, 2023, Bivio's annual audit party weekend. We'll be giving a detailed webinar on the steps you need to go through to do your club audit on January 7, and we'll be available all weekend to answer any questions you have as you work through the process. Put this date on your calendar and you can make sure you actually undertake this important club task. So what is an audit? An audit is an independent comparison of your club records to your financial institution records. It's conducted by club members other than the treasurer. Any discrepancies are noted and then at the end of the audit discussed with the treasurer to make any necessary corrections. It's not difficult to do an audit, but it is important for these reasons. First, to make sure your taxes are being prepared correctly. As we just mentioned, this is something all club members should be concerned about. Second, you should all feel comfortable that your treasurer is doing what you think they're doing with your club finances. Third, it allows everyone in the club to share the burden of ensuring your club is doing correct record keeping. It should not be something only your treasurer has responsibility for. Fourth, to demystify the whole process. Working through the steps of the audit will help everyone in the club become more familiar with club finances. They're not difficult, but they are a little bit different than some might expect. If everyone has a basic understanding of what is important, the club treasurer does not have to waste time and energy explaining why they're required to do certain things a certain way and why certain investments will cause accounting problems for your club. Bivio provides you with a checklist you should use to work through the steps of your audit. You'll find a link to it on our help page. It's straightforward and very important to work through. There are things you need to check that will impact your tax returns that are in addition to the regular cash balance and number of shares checks that you should do each month. If you don't follow our guidelines, you might miss some important checks. What is the audit process? First, pick a date in January to do your audit. It'll probably take you around 2 to 3 hours. Pick 2 to 4 people other than the club treasurer to conduct the audit. Prior to the audit day, the treasurer should gather records that will be needed for comparison from your financial institutions and from Bivio. And on the audit day, the auditors will work through the audit steps, making record comparisons. If they find any discrepancies, they'll note them on the audit checklist. Auditors do not make the corrections themselves. When the steps are all completed, the auditors and the treasurer will meet to discuss anything that was found, and the treasurer will determine what action is needed, make the corrections, and record the action taken. Then the treasurer and the auditors will give the final report to the club. It all goes quickly. Once you're finished, you'll have done most of the work needed to get your records ready to prepare your club taxes. All you'll need to do is wait for your 1099s to arrive so your treasurer can do a final quick records check. Along with an annual audit, it's important to keep your records correct during the year. Routine checks help you avoid having to address any time-consuming issues during tax time. You'll need to check whether Bivio is reporting your capital gains and losses, like your broker will, as soon as you have a sale. The sooner you check, the more time you have to address any discrepancies before they show up on your 1099 form. Let's talk now about how you can do this. It's one of the most important tasks your treasurer should be doing. First, a brief background. In 2011, the tax laws changed. Brokers are now required to report your cost basis and capital gains to the IRS on a form called a 1099. You also get a copy of this form. Your club tax return, prepared in bivio, needs to agree with the information the 1099 shows, and you need to check that it does. Fortunately, you don't have to wait until you get your 1099 to do most of these checks. You can get a report anytime during the year from your broker called a realized gain-loss report. You can compare it to the capital gains and losses report in bivio. The information on both reports should agree. Here's an example of the bivio capital gains and losses report and a realized gain-loss report from a broker. Yours may not look exactly like this one, but it will have the same information on it. You need to compare each sale shown on the bivio report with the same sale shown on your brokerage report. You should make sure and compare that the number of shares sold, the acquisition date, the sale date, the sales price, the cost basis, and gain and loss agree between the two reports. If they do not, or if you see a wash sale noted, you need to determine the reasons for the difference. There may be corrections you need to make to your bivio records. The sooner in the year you find them, the more time you have to get the help you need to get them straightened out. This is especially important if you have subsequent transactions for the same stock. One issue can quickly compound into many more if you don't get it fixed in a timely manner. Double-checking your capital gains and losses right when you sell stocks can also help you get your taxes done more quickly. If you need help from us resolving an issue, it'll take much longer to get it in the height of tax season than it will at other times during the year. Along with cost basis, which you should be able to address before receiving your 1099s, there may be other records changes you'll need to make that you won't know about until you do get the 1099s. Those changes will not be automatically made for you in bivio. You'll need to make them manually before you can generate correct taxes. Here are some of the most common ones. Check to make sure qualified dividends are being correctly reported, especially if you own mutual funds. Some mutual fund dividends are qualified and others are not. If you've had distributions from mutual funds and REITs, and even from some stocks, some of the distribution amounts may need to be reclassified. If their distributions are not really dividends, but are a return of capital or a long-term capital gain, you'll have to go back and manually split up each dividend distribution you've received during the year. You won't know what changes to make until the information is reported to you on the 1099. There's a step during the tax preparation process where you will complete the bivio amount, where you will compare the bivio amounts to your 1099 and where you can make changes if they're needed. These changes are very important so your taxes are reported correctly. Some of them will also adjust the cost basis of your stocks. If they're not made, then the capital gains and losses, when you eventually sell them, won't be calculated correctly. You may need to change the dates on interest or dividend income, originally reported as received early in the new tax year, back to a date late in the prior tax year. It will depend on the year your broker has reported the income received. If you've been keeping your club cash in a money market fund at your broker, they may have classified those earnings as dividends rather than interest. This is okay. You just need to make sure that your bivio records record the income in the same manner. If you've recorded the earnings as interest, you will have to edit the transactions and call them dividends. There are steps when you prepare your taxes that will guide you through comparing what is in bivio to what is on your 1099. You'll also be able to make any final manual adjustments to dividends at that time. Note that corrections to cost basis and capital gains are done by correcting your bivio entries, not by making adjusting entries when you prepare your taxes. That's why it's good to go through the steps outlined earlier to find and get those corrected ahead of getting your 1099. This all sounds like a lot, but there's many things you can do to keep your club record keeping as simple as possible. The more closely you follow these recommendations, the less you'll need to deal with any of the adjustments or corrections that was just discussed. There's no reason to be a club treasurer with a big or complicated job unless you make it that way. To keep things simple and avoid having issues with cost basis reporting, here are some suggestions. First, make sure you know what default cost basis method your broker will be applying. This is important if you own more than one lot of a particular stock or mutual fund. If you have a sale and if you don't sell all of the stock at one time, you and your broker will need to identify which lots were sold. You can tell your broker to select certain lots at the time of the sale, but if you don't, your broker will apply a default method. The IRS assumes and bivio uses FIFO, or first in, first out, as the default method. To keep things simple, make sure your broker is also using this both for your stocks and for any mutual funds and ETFs. You should check on this as soon as possible. It cannot be changed once a sale has happened, and if they use something other than FIFO, you will have to make manual adjustments in your bivio records to bring them into agreement. Make sure you avoid wash sales. Do not make any investment purchases of the same stock within 30 days before or after a sale where you have had a loss. Wash sales affect cost basis. They will show up on the broker's realized gain-loss reports as soon as you've had a wash sale. You want to catch them quickly and get them addressed during the year to avoid delays at tax time or cascading problems with subsequent sales. Contact us at support@bivio.com as soon as you see a wash sale and we'll help you address it. Please spend some time now comparing the information your broker has for cost basis with your bivio records. That way, if there's any issues that need to be investigated, you'll have time to get them straightened out. They sometimes are not simple or quick to work through, and if you will need our help, we're probably going to be very busy during tax season helping clubs address questions. The earlier you can get the question to us, the quicker we can help you get an answer. And as we showed you earlier, you can do these comparisons each time during the year that you have a sale. There's no reason you need to wait until tax time. While we're talking about keeping things simple and making comparisons between bivio and your broker, let's talk about the impact of automatic dividend reinvesting on keeping your club records. Automatic dividend reinvesting, also called drip investing, means you tell your broker to automatically purchase new shares of a stock when you receive a dividend. We highly recommend against this practice. Why is that? Because each dividend that you reinvest is a new lot of stock with its own cost basis, separate purchase date, and number of shares. You could end up having to verify a lot of transactions. Here's a capital gains list from a real club that was doing dividend reinvestment. But this is only page 1. It goes on and on and on and on, and the year wasn't over yet. Comparing each one of these transactions in bivio with the broker's information is an awful lot of work for a club treasurer. For only $345.62 in gains for this club. If your club is doing drip investing, you will need to do this comparison. We can tell you from experience in working with many clubs that the work involved in keeping the records correct for these is not worth the time it takes. By far, the majority of clubs that have problems at tax time are those doing automatic dividend reinvesting. And now we'll switch presenters. Here's my colleague, Joanne Hermiston.
Thank you, Becky. It's all about keeping things simple. We want you to be able to have a club and to spend your time and energy learning about investing, not partnership accounting. If you follow our guidelines, you can do this. Here's another important thing I want to remind you of, because despite our treasurer training, we still have clubs every year that have issues with this. That is the kinds of investments you can account for using bivio. If you own any of these, unfortunately, you are going to have the issues described for your 2021 taxes. But at least 2022 isn't over yet. If you sell them before the end of the year, you won't have the problems again for next year. It is important to understand that the different types of investments have different types of tax reporting requirements. bivio is designed to let you have a simple way to have an investment club and easily comply with tax requirements. Because of this, the types of investments you own in your club are limited. bivio is only designed to do the accounting and tax preparation for clubs holding certain types of investments. Basically, these are publicly traded stocks and stock mutual funds and stock ETFs, exchange traded funds. And in addition, if you have an active partnership subscription, you can account for options trading. Our preferred level subscription also lets you account for up to 10 options transactions. If your club holds any of the investments we're going to discuss next, you will, at a minimum, have a lot of extra accounting and tax preparation work to do. In some cases, you will not even be able to use bivio to prepare your taxes. Let's start with the big no-no. These are MLPs and PTPs. They are master limited partnerships and publicly traded partnerships, such as Energy Transfer Partners, ET. Their distributions bring many special reporting issues which are not addressed as part of the bivio tax software. If you own any of these, you'll need to find an accountant to help get your club taxes correct before they are filed. You'll also need to use our concierge service to adjust your bivio accounting records based on the information your accountant will need to provide so that your records will be correct going forward. How will you know if you own any of these? It may have the word partnership, LP, or partners in its name. It will pay distributions that are reported to you on a K-1 form rather than a 1099. We have a help page called Before You Invest that will take you to a comprehensive list of tickers of these investments. We try and highlight them in red on the Accounting Investments page in bivio. And when you generate your tax forms, you will find a note on the cover page telling you that the forms prepared in bivio are not correct and should not be filed as prepared. You'll need to work with an outside accountant to prepare your club taxes correctly. Investment in REITs, which are real estate investment trusts, are also problematic. There are many of these. You'll also find a link to a list of them on the Before You Invest page. Here are just a few examples. You can account for them in bivio, but they require extra adjustments to your records during tax preparation. You won't know what adjustments are needed until you get your 1099 forms, or you may even get late season adjustments you need to handle. If you do not feel comfortable making manual accounting changes in your records, you'll probably want to steer clear of investing in REITs. We've had experience with many treasurers who are working through the end of year REIT adjustments who tell us they are going to tell their clubs to sell the REIT as soon as possible and not buy any more in the future. Other problem investments include commodity ETFs. All ETFs are not the same. ETFs that hold commodities rather than stock, such as GLD and SLV, bring extra tax issues with them. Addressing them requires many manual calculations for each month you own them. You then need to make many changes to your bivio records and to your tax forms. They are not easy, and they are not made automatically for you. You probably want to stay away from investing in them. You'll have the same issues with Bitcoin and other cryptocurrency trust ETFs. Also, investments in foreign companies. You can often invest in the stock of foreign companies by purchasing what are called ADRs on the US exchanges. These are not usually an issue for your club accounting. Problems sometimes come up, however, if the companies you have invested in go through any sort of reorganization, such as splits, spin-offs, and mergers. These can have tax implications you need to address. While we try and help you work through what you need to do, we find that there's a wide variation in the completeness of information that is provided by these companies for handling the US tax issues. This can create delays or uncertainty in handling your taxes. Other investments which you are not able to handle with bivio include Forex trading, which is foreign currency exchange trading, Section 1256 contracts, futures, cryptocurrency, and investments in real estate. If you have any questions about something your club is about to invest in, please ask us before you buy it. We will be glad to research it for you and let you know if it will cause you any problems in your accounting or your taxes. As I've been discussing, you can find a specific list of some of the investments we know cause trouble at this link on our help page labeled Before You Invest. There are always clubs that find out the hard way that they have purchased an investment that will create problems, and they often do not have enough of it to make dealing with the tax implications worth it. Unfortunately, once you've purchased it, you're stuck with the problems for the current tax year. The problems will compound the longer you hold on to it, so make sure to sell it as soon as you find out about it to minimize the problems for the current year. If you'd like to be able to use bivio for your taxes next year, you should sell problem investments prior to the end of this calendar year. If you prepared your club taxes in the past, you'll find most things will be the same as last year. You probably remember that in 2021, there were significant reporting changes regarding investments in foreign company stocks. Your club filed Schedule K2 and Schedule K3s. This year, the IRS has announced new instructions regarding reporting of this foreign income. The 2022 draft IRS instructions now include a K2 and K3 domestic filing exception. The domestic filing exception is a way for many clubs to omit the Schedule K2 and the Schedule K3s from your 2022 tax filing. Not all clubs will qualify. The IRS draft instructions for the exception say that if all four criteria are met, then domestic partnerships are not required to complete and file the Schedule K2 and K3 with the IRS. So the first criteria is that the partnership has no foreign activity or limited foreign passive activity. Limited passive activity is defined as generating $300 or less of foreign tax. The second criteria is that all partners are U.S. citizens or resident aliens, domestic decedent estates, or certain domestic trusts, including revocable living trusts. There cannot be any corporate partners and any other pass-through entities as partners. The third criteria is that the partnership must send a specific written notification to all partners before the filing date of the partnership return, including extensions. It needs to be delivered by mail or electronically, and it can be an attachment to the Schedule K1. It needs to say that partners will not receive Schedule K3 from the partnership unless the partners request the schedule. The fourth criteria is that no partner specifically requests the Schedule K3 from the partnership by the 1 month date. meaning 1 month before the actual timely filing date of the partnership return, including extensions. For most clubs, the 1-month date will be February 15th of 2023. The last possible request date is August 15th if your club files an extension request. Here are the 4 exception criteria again. If you meet all 4 criteria and no partner requests a Schedule K3, your club does not need to file Schedule K2 or K3. If your club anticipates that you will meet the qualifications in items 1 and 2, then it is very important that before actually filing your club partnership return, your club needs to send out a written or email notification to all partners. Here is a simple notification that partnerships can send to all partners if your club wants to meet the notification criteria and have the opportunity to omit Schedules K2 and K3. It needs to say, partners will not receive Schedule K3 from the partnership unless the partners request the schedule in writing. If a partner in your club does request a Schedule K3, then your club may need to file a Form K2 and will need to provide a K3 to the member. The filing requirements vary depending on whether the partner's request was made before or after the 1-month date. Bivio's tax software will help you through this process, and you can learn more about it in the Bivio tax preparation webinar that we've scheduled for February 13 of 2023. If your club has more than $300 in foreign taxes, the IRS has provided one other exception for domestic partnerships. It is the Form 1116 exemption exception. The limited foreign activity criteria is applied at the partner level, not at the partnership or club level. The activity is limited to passive category foreign income, which generates no more than the $300 of foreign income taxes. In order to qualify for this exception, the club still has to meet criteria 2 and 3. Criteria 4 is changed. Before the 1-month date, members must notify the club that they will not be filing Form 1116. This will exempt the club from preparing Schedule K3 for only those members. The club will still have to prepare and file Schedules K2 and K3 for any member that doesn't notify the club. So if your club said no to any of the exception criteria, or if a member requests it, your club filing may still need to include the K2 form again in 2022. It will have several pages. Also, if your club said no to any of the criteria, or if a member requests a K3 form, then some or all of your club members will once again receive a K3 form in addition to their K1 form. This is the first of several pages they will receive. A copy of all of these will also be included in your total club filing. So, does your club own any stocks that are headquartered outside of the United States? For example, you might own foreign companies that are traded on the U.S. exchanges as ADRs. Or you may own ETFs or mutual funds that invest in foreign companies. In order for the Bivio tax program to fill in your tax forms correctly, you need to identify the country where each of your stocks is headquartered or incorporated. If you are unsure what country that is, then do a simple Google search using the company name and headquarters location, or you can try incorporation location. You may also find this information on a 1099 form from a prior year or on a new 1099 that you will receive in early 2023. If you still have a question, email us at support@bivio.com and we can help you find the information. When you have identified the country where the company is incorporated, you need to enter this country code in Bivio on the 1099 INT DIV review report, which you can find on the Accounting Reports page. On that form, you will find a column which indicates country. Here is an example where US is listed for the company BP. If you do research, you will find that BP is headquartered in the United Kingdom. To adjust what is shown, you click on the two-letter country designation and this form will open. At the top is where you select the country that the company is headquartered in. In this case, it is United Kingdom. After you accept the selection, you'll be taken back to the form. You'll see that the symbol for the United Kingdom has been filled in. It is GB. If you own any mutual funds or ETFs that hold foreign companies, you need to select RIC, Regulated Investment Company, from the list of country choices. You just continue this process until you've correctly identified the country for each stock your club owns. It's best to do this now to avoid any delays at tax time. This information will be used to prepare the K2 and K3 forms when you do your club taxes. The final things we want to talk about tonight are a few things that should be addressed prior to the end of this calendar year if they apply to your club. One of them some clubs consider is called tax loss harvesting. Tax loss harvesting is when you sell stocks in which you are showing a loss in order to offset capital gains you've had on other stocks you've sold. You only pay taxes on your net gains. Net gains are the difference between any gains you had and any losses. In addition, on your personal taxes, up to $3,000 in losses can be used to offset income you've earned in other ways, such as your regular salary income from your regular job. So what does this mean for you? If your club has stocks which are showing a loss, and your club has already sold stocks this year or plans to, and is showing a net gain on these sales, your club might want to sell some of the losers so you can lower the amount of gain your members will be taxed on. Just a caveat about doing this, however. Make sure you have not purchased any shares of the same stock less than 30 days before the sale. And if you want to purchase it back, do not do so within 30 days after the sale. If you don't leave these 30-day buffers between your purchases and your lost sales, you will trigger the wash sale rule and your loss will be disallowed. That means you won't be able to use it to offset your gains. This is another reason not to do automatic dividend reinvesting. It is not unusual to receive dividends after sales. If they are automatically reinvested, it is a purchase. If any of the shares you sold produced a loss, you'll end up with a wash sale you'll have to account for, and that isn't easy when you are drip investing. Another issue you may need to address with your entire club prior to the end of the calendar year is related to something called CPAR. CPAR stands for Centralized Partnership Audit Regime. It is the rules on the process that will be used if your club is ever audited by the IRS. The IRS changed the rules on this in 2018. These rules make it easier for them to audit partnerships, such as your investment club. If you meet certain requirements, you'll be able to opt out of being covered by these rules. Why do you want to do this? Well, because who wants to make it easier for the IRS to audit them? When you prepare your taxes, you'll be asked to designate if you want to opt out of these rules. If you cannot opt out, you will need to designate a partnership representative. In the event of an audit of your 2022 taxes, they will be the single person the IRS will work with and make arrangements with in the event of an audit. If any issues are found, any taxes, interest, and penalties due are assessed to the club during the year the audit is conducted. The requirements you need to meet to be eligible to opt out are these: less than 100 members. You could only have certain types of members. No members who are partnerships, trusts, foreign entities, disregarded entities such as IRAs, a nominee or person that holds an interest on behalf of another person, such as a uniform gift to minors account, or an estate of an individual other than a deceased partner. Your return also has to be filed by March 15th, or if you properly file an extension, the extended due date of your return. If any of your members hold their club ownership in a trust, your club won't be able to opt out. You'll be required to designate a partnership representative for the tax year and if your club was audited, it will be conducted under the new procedures. We recommend that if your club qualifies to opt out, that you do so. If you opt out, it doesn't mean your club can't get audited. It just means that if it does, the IRS will have more work to do to conduct the audit and collect back taxes, interest, and penalties from members of your group. If you opt out, you don't have to designate a partnership representative. In addition, if you opt out and later have to file an amended return for some reason, the process will be simpler and something you should be able to handle yourselves. If you have not opted out, you will need to work with an accountant to file an amended tax return. In addition to these things, there are some other things you could do now to minimize or prevent an impact on future year's taxes. First, sell any problem investments such as MLPs, REITs, and commodity ETFs prior to year end to avoid tax headaches next year. You will probably find that the amount of income you have received from them this year does not justify the extra expense you will have to incur to get your club taxes prepared correctly by an outside source. If you own them now, you'll be stuck with the headaches for this tax season. But if you sell them before the end of the year, you will be able to avoid having the same problems next year. Consider selling DRIPs or discontinuing automatic dividend reinvestments. As you saw, it gives you a lot more work to do to keep your club records correctly. You'll also have more chances of triggering a wash sale and the accounting complications that come along with it if you do sell any of your holdings. With brokerage commissions low or non-existent, simplify your club accounting and improve your portfolio management by accumulating dividends. Then you can invest regularly by consciously making a decision for each purchase rather than doing it automatically in extremely small amounts. You need to pay out pending withdrawals. Otherwise, the withdrawing members will have tax consequences on next year's taxes as well as this year's. If you are going to disband, you must make sure you can complete all of your transactions before the end of the calendar year. If you will receive income or have expenses in the new year, you will be dealing with taxes for both this year and next year. You need to check the ex-dividend dates for all your stocks. If your club owns them on the date they go ex-dividend, you will be receiving the dividends. They will need to be reported in the tax year you actually receive them. Make sure your broker is using FIFO as your default cost basis method, not only for stocks, but also for mutual funds and ETFs. Put your audit on your schedule for January so your members can plan to be available. Just to reiterate, check your cost basis information. The sooner you check it, the less chance any issues you find will delay your tax filing. Share preliminary tax allocation information with members. This may be needed by those that have to file estimated taxes or to fill in things like financial aid applications or farm tax returns. Make sure to make it clear that amounts are preliminary and subject to final records verification. Make sure you know what kind of state tax filing requirements you might have. Bivio provides some state tax forms and offers you a very cost-effective approach for handling club taxes for states we don't provide. Discuss the CPAR requirements with your club. Determine if you can make the election to opt out. If not, determine who you will be designating as your partnership representative. You will need Social Security numbers for each of your members to be able to prepare your taxes. Make sure you work on getting them if you don't have them already. And if your club may qualify, make sure to send all partners written notice that the K3s will not be issued unless the partner notifies the club in writing before the 1-month date. To summarize, we've touched on a lot of information tonight. We've given you an overview of the tax forms you need to file and how you'll use Bivio to prepare them. We've covered the importance of making sure your Bivio records are correct and steps you can take right now to ensure that. We've touched on things you should do to make sure your club record keeping is kept as simple as possible to help you avoid tax headaches. We've discussed what is new this year, and we've highlighted some things you should make sure you get done before the end of the calendar year. Don't forget, federal tax preparation software is already included in your annual bivio subscription. As long as you have an active bivio subscription at tax time, you do not need to worry about purchasing a separate tax printer program to do your club taxes. Finally, just a reminder that bivio is committed to providing you information about a variety of opportunities to learn about both club operations and investing. We encourage you to join our Club Cafe discussion list. We send out regular hints and tips about running your club, preparing your taxes, and choosing your investments. If you'd like to discuss an issue your club has with other clubs, you can post your question here to get some feedback. You'll need to join the list to participate, but it's easy to do by going to the link you'll find here on our homepage. We're here to support you during tax season. The quickest way to get answers to many of your questions is to go to our help page. You'll find a link to it at the bottom of your screen when you are logged into your club. If you can't find an answer there, email your question to support@bivio.com. Just a note, cost basis issues can take us a while to help you work through. The sooner you ask them, the quicker you'll have an answer. Now, if you send in any questions when you registered and we haven't answered them tonight, please send them to that support address and we'll help you with your club specific issues. You've done the right thing to spend a little time with us today, getting oriented about what is involved with getting your records ready and preparing your club taxes. If you take a little time now taking care of anything I mentioned that applies to you prior to the end of the calendar year, you'll be able to relax and spend your time enjoying the holiday season.